Good morning, Wall Street winners. It is Wednesday, July the 17th, and it is red across the screen with the three indices in the US. And not surprising, we have had a number of very positive growth green days. The Dow yesterday had a huge day. It was up significantly, 700 and almost 43 points. So up to fairly, I think it was a new high of 40,954. So we can't be green every day. That doesn't mean there's not an opportunity to make money on the red days when we start out in the red. And it doesn't mean we're going to finish in the red. It certainly doesn't mean every sector is going to be in the red. So let's run through where we are today. If we take a look at the indices at the top of the Yahoo Finance app here, you'll see that crude is up. So this is an interesting pivot point for us in the week. If we scroll right to the bottom of our list, and we will come back and go through that, but if we take a look at the events calendar in the utilities section, you'll see that Kinder Morgan, the first of the oil companies, is going to be reporting earnings after market today. And then if we scroll down to Friday, we're going to see that both Halliburton and SLB are reporting before the market opens on Friday. So we're going to start to see a bit of a pivot in focus over to oil. And I think that's where I'm going to put most of my attention today is on the oil side. Can't rule out the financial sector. So a couple of narratives going on right now in the greater market. The first is a lot of folks are now talking about the strength of the regional banks. This isn't something we've heard. We haven't heard the word strength and regional banks used together for quite some time. Since really the prior to Silicon Valley Bank and a few of the other smaller regional banks going bankrupt or being bought out back in March of 2023. So we're now starting to hear that, and that might be a positive boost today to the likes of Zions Bank, which is a regional. We might see a lift in Charles Schwab, which reported yesterday, and certainly took a greater hit than I think it may have or should have. So we may see a bit of a dead cat bounce there. But in order for that to happen, we're probably going to have to see the Dow get back up to at least even, if not into the positives and into the greens. So we may see another red day on Schwab. I think there's going to be a buying opportunity here for Schwab. I think you'll see Schwab find a new low maybe between the 65, 66 range. And then I think within a week or two, this stock is going to recover back up into the low 70s. I think we're still going to find good traction with some of the big financial names like Goldman, Morgan Stanley, JPM, which have all had pretty decent results in the last few days. However, I would wait for a bit of a pullback in those. I wouldn't buy them at their recent highs right now. M&T Bank is set to report very soon. If we take a look at the earnings, it says to be determined, but I'm pretty sure if we go back down to the events calendar, M&T is set on Thursday to report before market open. So it'll be interesting to see what comes out of M&T Bank. I think at 163, in my opinion, it's already priced to have good positive earnings. But one that has pulled back recently that I think is worth a look is Raymond James. So I think Raymond James fell yesterday because it's in a similar category to Charles Schwab, and I don't think they're completely aligned business-wise. Raymond James does a lot of different things, has a very successful wealth management business incorporated in it, and its U.S. organization is quite large and significant in size, very competitive, and it seems to be growing on the wealth management side. So if that's the case, when they come out with earnings, which is in the next, I think it's next week or the week after, if we take a look at that, 7 days. So next week, I think we should have a positive earnings report from Raymond James. We then scroll up a little further. We've done very well with SoFi. I sold out of SoFi yesterday at 7, a mix of different prices, but my last one was 773. This was a stock we picked up at the 620s last week. So this has been on a rocket ship trajectory. Earnings are coming up in the next couple of weeks for SoFi as well, but I am waiting for a bit of a pullback to add more of that to re-add that to my position, because I have sold out of SoFi at this point, and I'm waiting for a bit of a pullback in finance overall. Then we get into tech. The NASDAQ is down. It's getting hammered today, but that's okay, because everything needs to pull back at some point in time. And when things pull back, it provides a buying opportunity if you have some cash or capital on the sidelines. And what we do have coming up this week, again, if we go back down to utilities and events calendar, you can see that TSM and Netflix both report on Thursday. And so those will be our first introduction to where things are going from a tech perspective. Obviously, Netflix, a bit of a consumer-oriented company, a media company, also a tech company. So it kind of straddles multiple sectors. But then if we get into next week, you've got Zions Bank out of Utah. Google is reporting next Tuesday. Visa, Healthcare of America, Bank of California, IBM comes out Wednesday, HP Wednesday, Valero Thursday, more oil. On semiconductor, and then AMD the following week, along with Microsoft, EA. So we're starting to get into both the early semiconductor in some companies with TSM, more offshore, and then we're also starting to get into regional banks, and we're getting into oil. So I would be maybe just looking for different pockets. I bought into some Meta yesterday. It looks like it's going to be down pre-market today, but I think Meta is a steal in the 480, 490 range. So this would be a great pickup at a discount going into earnings. They're going to come out in 2 weeks with their earnings, and I can expect nothing but really strong earnings from these folks. They missed, the market felt they missed based on future forecasts, but their numbers were actually extremely strong. This was a stock that within the last 2 weeks was at 540 and peaked at that level. It's now come back significantly. So you're getting literally a $50, $60 savings at this point, depending on where this bottoms out. If we go into the day today at $7 or $8 loss or decrease from where it closed yesterday. Amazon Prime days are on. The Prime sales seem to be very good. It's not really going to help with their quarterly results, but already in a very strong position. If Amazon pulls back into the low 180s or even the 170s, this would be a steal of a deal for long-term success. And then you've got some of the other semiconductor-related companies, Lam Research off $50. If this gets down into the 900s, again, I think a strong buy for a long-term hold going forward. We're not moving away from semiconductors and the need for manufacturing these. It's only getting greater and greater. And that leads to others like AMD and TSM. Now, TSM's coming out with results this week. They're coming out with results, and that's one that for some reason I can't see it here. So let's just type in TSM. I know it's in my list. I just can't remember where it is. So if we look at TSM, closed at 186, down significantly at the open here. This would be a steal at 176 if it opens down at that level going into earnings later this week. It may end up a little bit lower, but if this is in the low 170s, I'm definitely going to be adding that to my portfolio today and waiting for earnings to come out, because I do expect they're going to be extremely strong. And then as we scroll up, ARM, this is what I'm staying away from, even if it dips $8 or $10. This is a stock that is completely, in my opinion, overvalued and is a huge risk. 616 times price to earnings ratio. I would rather own NVIDIA or TSM or some of the others with a more realistic price to earnings ratio and wait for that to resettle. Others that are going to come out likely with strong results are the cybersecurity companies. We've heard a lot about cyber attacks, large companies getting attacked and having to deal with payouts and deal with remediation of those issues. So those are going to be your Cloudflare, which is Net, your CrowdStrike, and then your Palantir as well to a certain extent. And then your software companies that are just generating cash. So CRM, as it dips, is a great deal. And Workday, which we scrolled through towards the bottom here, Workday is a steal as well if that dips, especially if it dips into the 220 range. That would be a great, when I say long-term hold, I'm talking about 30 to 60 days potentially in that case to get a nice sizable return. And then we look at oil. Oil is now up 42 cents this morning. And as you've seen, if you follow my videos, oil jumps around like crazy. It was off $1.50 yesterday pre-market, and then it settled up above 81 for the close. But this is something that is based on some economic data coming out of China, where they're seeing that the economy is slowing. If the economy is slowing, manufacturing slowing, and if manufacturing slowing, then the need for oil for manufacturing is going to be less. So it's decreasing their consumption, and that's potentially driving down the futures. That said, economies, big economies around the world are still consuming massive amounts of oil despite our green initiatives. And I think we're going to see crude futures get back up into the 85 range as we get into the fall season. And that's going to bring up all of these oil companies. We're also going to start to see from Kinder Morgan, which we follow here, we're going to start to see earnings out for that company tomorrow. So it'll be interesting to hear what they have to say. That'll be a good lead in to SLB, which is on Friday. And we have another on Friday. It's escaping my mind right now. But then we have Valero coming up in the next couple of weeks. We have Exxon and Chevron coming up in the next couple of weeks. So all of these are going to be announcing results. And I think that what we're seeing here in terms of price-wise, we're at a pretty fair price point, if not undervalued. So these would be interesting purchases for a 1 to 2 week hold around earnings season, because I do expect that earnings will be positive. Then we talk about the home run we hit yesterday. So buying a put on JBHT. I've been talking about JBHT over the last couple of weeks. It's had a super strong couple of weeks. If we look at the 1 month chart, back from around July 9th, this thing has had a rocket ship trajectory from the 154s up to the 176s. That's an 11-12% gain right there. They had extremely bad earnings yesterday. We're going to see a big pullback in this stock today. It's down 2.86%. I think it's going to go down more like 4 to 5% today. Just after the open or at open, it should drop down into the mid to low 160s, and it could continue its downfall back into the low to mid 150s over the next couple of days. So this is a put I bought that expires on Friday, put for 170. And I expect that will be a 200 to 300% gain as we see that stock open and start to fall today. Others that seem to be doing well, and for no particular reason, but assuming that numbers are going to be positive as we come out of or into earnings season for the quarter. HCA reports in 6 days, Healthcare of America. The healthcare stocks have taken a hit during the year, but are slowly coming back. Humana had a great day yesterday. It's almost back at $400. Ones I would stay away from right now would be your retail stocks. So consumer spending is down. Inflation, although it's coming down to levels that may allow the Fed to actually make a rate cut in the September timeframe, the rate cut's going to be minimal. The impact on consumers is going to be negligible, probably not even noticeable if it's a 25 basis point cut, which is 1/4%. And we're just not seeing that level of spending at retail. The consumers don't have the same level of discretionary income because inflation is eating away at that. So I would be staying away from retail at this point, with the exception of maybe your largest retailers, especially your online retailers like your Amazon, but also maybe your discount retailers like your Walmart and your Costco that drives a significant amount of revenue from its membership sales. So that's where we are today on Wednesday the 17th. Good luck with your trades. Follow my thoughts on this channel. I think you're going to find you'll be able to increase your income by your investing knowledge, and improving that investing knowledge and making some strong investment choices will allow you to put your money to work for you instead of you having to work for your money. Hope you like this